Aloha, this is Brian Watkins. This is the first video tutorial for QuickBooks in Accounting 231. You should be at this point in the module looking at the QuickBooks Practice Number 1 items, and then what you will do is open a list of transactions. QuickBooks is bookkeeping software. It exists to capture the information provided in business operations, and then it prepares the accounting statements for you. I think every business trained student should be able to basically open up QuickBooks and start a new company. So let's put our practice aside. You'll have it obviously on your desk as the exact same transactions are provided to you in the testing center. Alright, when you start QuickBooks, this is your Express Start screen. This is what you see when you begin the program. So we're going to start. Now the business name, all of this information, if this were a real QuickBooks exercise, you'd carefully enter all this information. But for here now, we'll just say QuickBooks Practice Number 1. Now you guys would say Accounting 231 QuickBooks 1, your last name as your business name. That way I could tell whose files are who. So make sure to put your name for the business name. Alright, in our practice, in the first paragraph, it tells you what you're going to do. You're going to name your company after yourself. Then we're going to select a general service-based business, and then a sole proprietorship. So let's do that on this screen here. The industry is going to be near the bottom, a general service-based business. Double click, I guess. Make that come up. Alright, and our business type, this is the form of ownership we have. Corporations have stockholders, but you're going to do a business just as yourself. Unincorporated, you own all your assets. Okay, all this other information we can do without for now. So we'll create our company. And I'll pause. Okay, it took a little while, but this is the screen you get when QuickBooks has finished its setup process. So we're going to start working right away. And this will be our QuickBooks, kind of the map to how our business is going to work. Now you'll note that as you look at this map, there are certain things missing that we're going to need. Number one, there's nowhere to enter purchase orders and inventory. Alright, let's close the Accountant Center that comes up. And what we're going to do is we're going to go to our Edit Preferences. Okay, and in the preferences, this is where you make selections that tailor QuickBooks to your various business situations. So we're looking for items and inventory. And there they are. We're going to look at company preferences, and we're going to check this box that inventory and purchase orders are active. We're going to do this in all 4 QuickBooks exercises and on the final. So learn how to do that fast. Okay. Okay, it's going to close everything for you. And when you see a blank screen like this and you want to go back to where you were, go to your left and click on the home page. And that'll bring you back. Alright, we're now ready to start. So you begin your business here by going to the banking window, which is this entire square here. And we're going to click on Record Deposits. QuickBooks knows we don't have a bank account, so it prompts us to create one. We say yes. Okay, now the account name, let me bring in our sample here. Bank of Laie. So we're going to put Bank of Laie just to describe our account. You could put cash account there. Okay, we're going to save and close. And here's our deposit screen. Now, this brings up the fact that we're doing this as an academic exercise, so I've provided dates for you for every one of the transactions. Okay, so in order to do this, you have to make sure that you enter the appropriate date. So we're going to click on that calendar first and go back to February 3rd. Alright, that's the right date. Now, we're going to receive from, and we have to put here either our own name if we're giving our own money, or the name of whomever we receive our funds from. In this case, we're going to get them from the bank in the form of a loan. So the bank is going to be a vendor. A vendor is any business that we do business with. A customer is someone to whom we sell. An employee is someone that we pay payroll to. Other would be yourself. Okay, now this is a new vendor screen. It gives you a chance to put all kinds of information in, which if this was a real-world exercise, you would do it. And that way that information is easy to get when you're doing business. But here we don't need it all, so we're just going to say that our vendor was the Bank of Laie. We're not going to worry about opening balance or the date. Okay, for purposes of what we're doing, that's not necessary. All right, now what account do we use for this? This is one that is kind of tricky for folks. We're going to use a loan account. So we're going to create a new account called Note Payable Bank of Laie. Now, use the pick arrow here to create a new account. So I'm going to click on Add New. And this is a suggestion screen. This is going to send you to another screen. So we might as well take advantage of it. We're going to mark Loan. Okay, and we're going to continue. This is the actual Add New Account screen. And the type of account is the most important thing on the screen. We were told that we want a long-term liability. So set that to long-term liability and give the account a name as suggested in your sample transactions. Save and close. So now we've got the name. The memo line is a place for you to give a brief explanation of what's happening. So we'll just say this is the opening deposit. And that will show up in various reports to help us know, what was going on. Payment method is going to be cash because the bank just gave us the loan. And I believe our amount is $25,000. Okay, we don't need to worry about the amortization or the percentages or anything like that. We'll make payments when the bank sends me the payments. So let's just put in our $25,000. Okay, so here's all of our information. We've got our date set correctly, so we're going to save the transaction. Okay, this screen will be your constant companion throughout these exercises because QuickBooks is designed to work in the now. It's not designed to work in the past the way we are here in school. So just say yes. We're sure we want to do it. Oh, and it beeped. Okay, I forgot to tell you about that beep. We don't want to turn the testing center into a video game arcade. So let's go back up to Edit, Preferences, General. Okay, General, Preferences. And we're going to uncheck Beep when recording a transaction. There we go. That'll make things a little quieter for you in the library or wherever you may be. All right, now, I suggested in the transactions that since this is your first attempt, let's take a look at our balance sheet and see what's going on. So what we're going to do is go to our reports, company and financial, and all I'm ever going to ask you to do are standard. A standard profit and loss, that's an income statement, and a standard balance sheet. So you don't have to worry about all the other reports right now. Now, it automatically threw you into August, and as you know, a balance sheet is just a picture as of a certain date. So as long as your date is after the day that you made all your transactions, it's going to be accurate. And here we see the $25,000 we just deposited, and the fact that it's a liability. It's not equity, because we borrowed it all from the bank, so we owe it all back to the bank. Right now, we don't have a dime's worth of equity in this company. It all belongs to the bank. All right, so we're going to close this, go to our next transaction. You go and rent an office at the Laie Professional Building, and you pay security deposit and first month's rent via check number 1 from your Bank of Laie account. Okay, let's go do that. Our checkbook is found in banking. So we're going to click on the check, and then we're going to see the date is the same, 2/3. It must have remembered from our deposit. And we're going to pay to the order of Laie Professional Building. Or no, wait. Paid to Hawaii Properties, Inc. Okay. Sorry about that. Hawaii Properties, Inc. Now, anytime you see an arrow here, there's a list that drops down. So you don't want to just type it. You want to hit enter and do a quick add. Okay, if this were real life, you'd set it up and you'd put all that information in. But here we just want to add it to the list as a vendor because it's a business we do business with. So now in the future, whenever I hit that pick list, you're going to see my vendors. All right, in the bottom, we enter the accounts. So our first account is going to be rent. Rent's easy. It's in our list, rent expense. And I believe our rent expense was $1,050 for the month. This will be first month's rent. Now, a check can go into two different accounting accounts at the same time. The other accounting account we want is the security deposit. And we look through our list of accounts and we don't see security deposit. So we're going to add new. Now, a security deposit is an asset. It's not a fixed asset major purchase. So we're going to have to go to other here, and we're going to go to an other asset. It's not current because you don't plan on liquidating that security deposit within the current year. So this is an other asset. Okay, and look at that. It figures out security deposits paid. So I'm going to say continue, and then I'm going to say examples, and security deposit asset is one of your more common examples. So I say okay. It puts the name in. That's all you really need is that name and to make sure that it's set for other asset. I save and close, and then I put the $1,500 into that security deposit. Okay, and at this point my check is for $2,550, and on the memo of the check I say security deposit and first month rent. So that someday if I look back at my checkbook, if I lose my other information, at least I know where that money went. Save and close, and yes, it's an okay transaction. All right. The office needs furniture, so we're going to go to town and buy $1,700 worth of office furniture and $300 of supplies. And we're going to write check number 2 to pay for this. So let's go back to our checking. Here's our check. We can go back in our checks, and we didn't put a number on the check. We probably should have put a number on that. So what we're going to do here is put a number by unchecking the print later. Okay? We'll just put the number in right now. So that's number 1. And I want you to know how to go forward. Yes, we want to record changes. Yes, it's okay to go forward and backwards. Most QuickBooks screens are the same way. We only have one check, so it's easy, but that up in the corner there is the way to look through what's going on. All right, we'll uncheck print later, put check 2. We're still on 2-3. We're writing this check to Honolulu Business Supply. We'll quick add them as a vendor. Okay, and now let's go buy our furniture. So if we look down our list, furniture and equipment shows up. Good. And I believe we're going to have $1,700 worth of office furniture. So office furniture. Okay, now the second one's a little trickier. The second one is what's called supplies. Now, supplies comes up in QuickBooks as an expense, but what we're doing is we're going to stock our supplies, and they're going to be an asset. So we're going to have to add a new asset. It's not a major asset, but it's a current asset because supplies are designed to be used up during the year. So we're going to continue this, and we're going to say office supplies inventory, because in QuickBooks, one of the little quirks QuickBooks has is office supplies is an expense. So we're going to add that word inventory to this, make sure it's a current asset, and save and close. And we're going to buy $300 worth of office supplies. That's your paper, your toner, all that kind of stuff. Okay, so put a memo in here, furniture and office supplies. And we're done with this check. We've got a good date. We've got the right amounts, the right accounts. We'll close. Now, if you just closed the check and you realized you made a mistake, you go back to your checkbook, hit the back arrow, and make the changes. All right, let's look at our next one. We have made a deal with the local cable company to supply fiber optic. This will allow you to sell high-speed internet. So we're going to write checks 3 and 4 for our internet setup here. So let's go back to our checkbook, February 6th. Okay, it's numbering our checks now. It figured that out. Okay, February 6th. And our first one is to Trans-Pacific for $1,500. So I say Trans-Pacific, quick add them as a vendor, and it's a computer or internet expense, $1,500, and this will be set up internet service. Okay, so internet setup. That looks good. Okay, that's check 3. So we're going to save that, and we're going to write a new one, check 4. Check 4 is to Island Tech for $2,000 for running fiber line. Okay, so we're going to put Island Tech as our vendor. Okay. We're going to do some more computer and internet expense for running fiber line. Okay, internet setup fiber line. You can write whatever you want in the memo because it's there to remind you of what's happening. So we'll save and close those 2 checks. All right. Now we're going to do a purchase order. We're going to send a document to this California Data Inc. inviting them to enter into a transaction with us for 20 wireless cable routers. We'll agree to pay $100 each. A purchase order is not measured in accounting because nothing really happens until the person you send it to decides to take the deal. Okay, so just remember, purchase orders won't show up on your accounting journal. That's all you need to know for now, because at the end, we're going to print 3 things out: the balance sheet, the income statement, and the accounting journal, which is a list of all the accounting that we did for this company. And I just don't want you to panic if you look at that journal closely and you don't see a purchase order. So let's go to the purchase order screen. It's now February 10th. And double check. February 10th, California Data Inc. So our vendor is California Data Inc. Because this box is already a vendor box, the quick add just goes direct. You don't have to choose vendor anymore. Okay, we would put all the shipping and other information in if this were real. But what we're going to do now is define an item. Let's widen this out so you can see that's a purchase order. So the item that we're going to define is an inventory part that we're going to resell. And we're going to call it wireless router. We could put more information if we needed to. Okay, wireless router. This is what shows up when we go and buy it from somebody. And this box has what goes on the receipt for our client. Now it's going to cost us $100, but we're going to sell them for $200. So we can put that information right in the definition of the inventory part. We have to have a sales account. So we're going to make income account sales. And you can disregard this inventory information. This is a feature that allows you to automatically reorder these wireless routers if we're running low. Remember, this screen is only to describe what it is we're buying. Okay, so we said okay. Now it's in the list. This screen tells us how many we want to buy. So now we have 20. We can write a message to our vendor. The memo would be something like first order of routers. Okay, so $2,000, save and close. So that purchase order now goes off to the people at California Data, and it comes back to us with the routers in about a week, and this time it's packed with a bill for $2,000, which we agreed to pay them. So we're going to pay them on the same day using check number 5. So let's go back here. So the purchase order was out. Now we're going to go along this line and we're going to receive the inventory that we got. And we're going to get it with a bill because we were told it has a bill. Okay, so the bill is going to be from vendor California Data. Here's where we start to save time. Open purchase orders exist for this vendor. Yes. And so all I have to do is check that box, and now my bill has all that information. So let's make the date the 17th. Okay, and the terms were due on receipt. So this is the bill for routers. Okay, now we can wait to pay the bill at any time, close that bill, or we can go down here to pay bills, which we're going to do on this transaction, and we're going to pay it today. So today is the 17th. Okay, it was due today, so I'm just going to check that bill, due on receipt, and I'm going to say I'm going to write a check. I'm going to assign a check number to it. That's all I have to do now. Just click Assign Check, click the item that we're going to pay the bill. And here it's just saying what check number. So I'm going to say check number 5. Okay. And we're done. Now, what we did there when we went through this whole process of entering and paying the bill was automatically, oops, I don't want the deposit screen, I want the check screen. We automatically wrote this check to California Data for those routers. Okay. So now we have received the routers, which means they're in our inventory and we can sell them to people. So we're now going to make 3 sales, one on the 19th, and we're going to have someone pay us cash, prepare a receipt, and deposit the funds. All right, so the sales, if they're cash, we give a receipt. If they're credit, we create an invoice. So we'll start with an easy one. Okay, it's now the 19th, and our company that we're selling to is Kaneohe Pawn Shop. Kaneohe Pawn Shop. And this box is a customer box, so when we quick add, it goes automatically into customer. Now, what items did we sell? Well, we look up our items, so we sold 1 wireless router, but we also sold a month's worth of internet. We haven't defined that yet. So if we go from the receipt to the add new, it figures out that we're talking about a service because we didn't ever order inventory to sell it, so it must be a service we're providing. And we're going to call it 1 month internet. Okay, we could call it anything. If we're a service business, the little restaurant, you could name each of your meals. 1 month internet. And it's costing them $500. And have to have a sales account. So we're going to put sales there. So that's the definition of the service. And we're going to have 1 quantity of it. Okay. Messages, hey, thank you for your business. You don't have to do that, but this is our first sale, and we save and close. Now, this is a common mistake students make on the final that gets to be pretty frustrated because you have to go in and take the final again. When you just collected money and we're done for the day, we go to the bank and click on it. QuickBooks knows that there's money in our cash register because we entered the cash payment. So we're going to check that payment, hit OK. It automatically prepares a deposit slip. All we have to do is save and close. And that money is now in the bank. Okay, so if we look at this point at our reports, we just had our first sale. And that company and financial, profit and loss, and we're going to change the dates to all. So there was our sale of $700. Our cost of goods sold for that router was $100. You can see the internet expenses that we did in setting up and our rent expense. So we're still in the hole. We haven't made any money yet, but we did have a sale. The other report we can do, reports, company and financial, balance sheet. will show us that we have $15,650 in our bank account. Okay, it shows us our inventory assets. Office supplies, furniture, everything that we've done so far is still visible. Alright, so we have 2 more sales. So on February 21st, we're going to sign up 2 more customers, Wall & Wall and Oahu Properties, and we're going to make exactly the same sale, and we're going to do it in cash. So it's now the 21st. We have Wall and Wall. We'll quick add them, and they get an internet and a router. And hopefully you see that once you get going with all that data entry, QuickBooks really does start to save you a lot of time. So we're going to save and have a new sale. Our second sale was to Oahu Properties, Inc. Okay, and we're going to quick add them in our customer list and sell them 1 month internet and 1 wireless router. And that's our third sale. And we're going to save and close at this point. And I want to show you something here. If you're about ready to turn in your reports or your statements, and you look at your balance sheet and you see undeposited funds, big no-no. So that should clue you in that you need to go click on your bank, click on those cash amounts, and get them deposited. Now, if you did that late, there's no penalty. Bookkeeping, sometimes you make errors and you fix them. The object is that your end numbers are correct. All right, last thing. We're going to make a payment on our loan that we borrowed. The payment is $575.73. I'm actually going to copy that. $104.16 is interest. $471.57 is principal. Let's copy the principal. Sorry, let's do that. So this principal amount is what we're repaying on the loan, and the interest is what we owe the bank. Okay, so we're going to do check number 6, and we're going to put the principal and the interest on our loan. So we're going to write a check. It's going to be the end of the month, 28th, and we know that we're writing to an existing vendor, the Bank of Laie. So we pick them out of the list. We know that we're going to pay back ourselves. So we look on our list. I'm scrolling up until we find our note payable. Okay, and the amount that I'm paying on my note payable is the principal amount of $471.57. This is huge. This is the #1 problem students have on the final. When you pay your loan, you first pay your principal to yourself. This is what you pay yourself. So first month loan principal. Okay, and then you also owe your bank the interest for their letting you use the money. So the interest here was $104.16. There we go. And if you didn't have enough to make the payment, interest always gets paid first. So first month interest, because the bank takes its money. Okay, so just remember that when you pay a loan, you don't have to re-enter a new account. You already created your loan account, and interest expense is already there. So it's really quite easy. So let's go into the memo line, say first month loan payment, and let's close our check. Now we are done. We have entered all of the transactions you were asked to enter. So how do we finish up? Once you've finished, prepare PDF files of the balance sheet, income statement, and accounting journal. Okay, make sure that the dates capture all of the transactions. All right, so we're going to do that now. We're going to go reports. Let's do the easy one first. Balance sheet standard. All right, so now what I'm going to do is I'm going to save this as a PDF. So I go File, Save as PDF. It comes up like this. I say QuickBooks #1. You would use your last name and just say balance sheet. Just some way you can recognize it. And you probably want to put it on your desktop. I, on the other hand, am going to put it in my 231 samples. Okay. And save. There we go. That's the balance sheet. Okay, now let's do company and financial, profit and loss standard. This one I have to be careful to make sure it's all. So all transactions that we've done. All right, I'm going to File, Save as PDF, QuickBooks, number 1, income statement. And done. The last one, reports. This one you're going to go down to accountant. And then you're going to go down to journal. And this is a list of all, if I change this to all the transactions we did. It did your debits and credits for you. So all you folks that barely survived 201, rejoice. QuickBooks does all that stuff for you. All right, now this one we're going to print to a PDF in a different way. So we're going to say QuickBooks number 1 journal and save. Okay, at this point, having done all of your accounting statements, saving them to PDFs on the desktop, you're going to come down to the last module in Instructure. And you're going to raise your hand, and you're going to get permission to take the QuickBooks Practice number 1 quiz. And at that point, you're going to take the quiz, and you're going to say exactly, for example, it'll ask you how much, bring up the balance sheet here, just for an example. So we go samples and balance sheet. Okay, so the quiz will say, what is your final cash balance? Well, that's your Bank of Laie. You would enter 16474.27. Okay, and then it would say, what's your inventory asset? And you just enter these numbers as the quiz prompts you. If you then get all of your quiz questions right, that means you did the exercise correctly, and you proceed past the quiz because you've now passed it, and you go to the upload page. Okay, so once you pass the quiz, you'll get onto QuickBooks Practice 1, and you can upload all 3 of your PDFs. It lets you do multiple uploads. So hopefully you don't have any trouble. If you do, raise your hand. But the object is that you get me the statements, because I don't pass you based on the quiz. I pass you when I look at your journal and make sure you did all of the transactions correctly. So that's our QuickBooks number 1 practice, and I think it's pretty easy. So you should have plenty of time to finish and work on your pivot tables.